All right, good morning, everybody. We're going to get started since we've got a lot of great things to talk about this morning. Welcome to our Epic River panel discussion from the front lines of PPP forgiveness. I'm your host, Lindsay Satula, and I wanted to start with some housekeeping. All attendees are muted, but I'm going to be monitoring the Q&A and the chat throughout the discussion. So if you have any questions, please don't hesitate to reach out there and I will get your question in as soon as I can. To get started, I'm going to hand this off to Jeff Grabowski, CEO of Epic River. And Jeff, you can take it away.
Great, thanks, Lindsay. So as I think most people on the call know, that our goal is to make sure every borrower can make the best possible financial decision without sacrificing convenience. And these days, that includes the PPP loan program as well as PPP forgiveness. And so we started building out a specific application to help banks and credit unions and their borrowers navigate the ever-changing rules and regulations that we're seeing around PPP forgiveness. So one of the things I did is I've brought in several thought leaders to help me and help our company develop this solution. And their different perspectives are very unique. And we thought it would be good to pull together all these folks for one conversation, try and provide some of that insight to you folks. So today I'd like to start off by introducing you to Justin. Justin is a partner with Aprio. Aprio is a CPA advisory firm, and they're on the front edge of things. They're educating borrowers. How do borrowers provide the information they need? How do they find the information that they need? Justin, do you want to talk for a minute about yourself and Aprio?
Sure, glad to do so. Jeff, thanks for having us here today. Happy to share our insights. Very quickly, me personally, I'm a partner here at Aprio. Generally speaking, my world has been audit, and it has been within the real estate not-for-profit practices in particular. But that's quickly changed since March 27th, and we'll see when that ends with the covered period continuing to evolve. But as Jeff mentioned, our firm's interest in PPP really began with finding liquidity solutions for our clients, how to keep individuals employed, and in some cases, how to just keep the doors open, as we represent clients across all of the United States and 40 countries around the world. That, of course, led us to the Paycheck Protection Program as a viable solution for many of our clients. And as we've been educating and working side by side with borrowers related to strategy, it's led to an opportunity as well to provide support to the PPP lenders out there across the country. In many cases, lenders are not looking to provide guidance, and so we're happy to solve that solution. And in addition, this provides a customer experience to the lenders and their clients, and it reduces certain risks to ensure that a borrower understands eligible costs, completes an application properly and accurately, and providing an opportunity to get that loan removed from your balance sheet. So happy to share our knowledge and insights here with you guys today. And Jeff, thanks again for having us.
Yeah, thanks, Justin. That's perfect. And it's amazing how much is being expected of some of these small business owners and what they need to prepare and be able to locate to get forgiveness that they went in expecting. Thanks. And next we have Scott. Scott is a partner at Mountain View Advisors, and Scott, it was an interesting conversation the first time I talked with him. Is they're on the side of what should the bank processes and tools look like to be able to solve these problems. And as we all see things changing, it's been really interesting hearing Scott's perspective on community banks versus credit unions and the differences there. Scott, you want to take a minute to introduce yourself?
Sure. Yes, and again, just like Justin, Jeff, thank you so much for having us participate. When we did speak, like many of us, we're all learning the PPP process and the PPP forgiveness process through a fire hose. So it's a matter of making sure you find the right resources. What we do at Mountain View Advisors is really work with our clients, credit unions, community banks, to optimize their technology, to improve their processes, and to build in workflow so that compliance is managed and controlled in an efficient manner. Working with some of our clients, we saw many of them taking loans in, just like many of you, and trying to find ways to get them done. So coming up with a more automated way to deal with the forgiveness side is very compelling and really will be critical for many of these smaller to mid-sized community lenders. The majority, 86% of the community lenders, 86% of the loans that were made by organizations with less than $1 billion in assets. Most of them probably weren't SBA lenders before this. So knowing what you don't know and how to find ways to mitigate risk are going to be critical. And this, process and system really is a great tool to at least organize your process, embed workflow, and get really, really tight controls in place. So we, like everybody else, want to see the experience with your borrowers be seamless so that you can then manage your controls and make sure you're not hitting road traps down the road that you didn't even see coming.
Perfect. Thanks, Scott. Yeah, that's really funny. There was a lot of dialogue about how community banks really stepped up in the PPP loan process, and that's great. But there hasn't been a ton of support for them in the PPP forgiveness process. So I appreciate that perspective. And last but certainly not least is Ken. Ken's a partner with Dorsey and Whitney, and Ken has been helping me from the beginning to try to figure out what is signal and what is noise when it comes to all the information that's coming out about PPP lending and what the SBA is looking to do. Ken, do you want to take a moment to introduce yourself?
Sure thing. Thank you, Jeff. Yeah, so Dorsey and Whitney, it's an AmLaw 100 law firm with an international presence, but also recognized as a leader in the M&A and banking and finance space. And that's where I come in. I'm a partner in their banking and finance group and have about a decade of commercial finance experience under my belt. I am currently part of the SBA PPP task force team that we have established at Dorsey to assist our clients, both the lender side and borrower side, through the PPP. So we have a nice, unique perspective to kind of see all the issues from many different angles. So that's been rewarding as I have participated in this PPP program. So of course, as a law firm, our focus is more on mitigating risks and staying within the guidelines. And so that would be my value add in this webinar as well, the perspectives I'll have in that respect.
That's exactly right. And I think, Ken, the first thing that you helped me realize is, sure, we need to get the form filled out. The borrower needs to know what they're doing. The bank needs to have a process, but there needs to be some diligence provided to make sure that things are being done right and the banks are covering themselves and they don't end up in a dangerous position at some point down the road. So Ken, if you could help kick us off here. PPP forgiveness continues to be a moving target for everyone. It seems like senators and now even directors of Treasury and everybody is saying things, but there isn't a ton of actual regulation or rule changes going on right now. Is there something or is there anything that banks and credit unions could do right now, even though there's so much uncertainty?
Yeah, you bet. So you're right. There is some uncertainty. There's talk of expanding the program even further, changing the dates, and this all has to get done by August 7th, of course, because that's the date by which the PPP goes away. Congressional leaders like Pelosi, just as recently as yesterday, mentioned that they do expect to modify the PPP, but right now we really don't know what that looks like. We do understand there's likely going to be additional relief and resources to the hospitality and restaurant industries. Above and beyond that, it's really unclear what it's going to look like. As for just the regular program, i.e. the program in place today, as many know, there's been ongoing guidance throughout the entire program. At some period, there was almost FAQs coming out daily, and the landscape was changing regularly. What we've found is that has more or less changed. It's been rather static for the last several weeks. To me, it's a little unclear. I was hoping and expecting, quite frankly, further FAQs in connection with the loan forgiveness application process. I'm still somewhat hopeful that we'll get a little bit more visibility, because as we dive into the loan forgiveness application, we're already seeing numerous ambiguities. And I would like to have the SBA speak to those, but we haven't seen an FAQ for almost a month now, which is really unusual. So, the landscape has changed dramatically, but I think we're now at a place where we can take a step back and just work with what we have.
Yeah, and I think you're exactly right. It's a tough scenario where there's a lot of change going on, but we do have some information that we can work with. And just in your world, when it comes to having some information to work with, what is Aprio telling borrowers right now? How can they prepare for getting through the forgiveness process?
Sure, yeah, it's a great question. We were fielding this tens to hundreds of times a day from the clients we're advising throughout the PPP loan forgiveness process. I think the answer depends. If you've planned to elect to use the 8-week covered period, at this stage, it's really a documentation gathering exercise in preparing for loan forgiveness. We know our start date, we know our end date, what's happened is done. And now we've got a pretty good list here of documents that are both required to be submitted when the loan forgiveness application process is open, as well as those that we must maintain. And so really working through that is kind of step one for those that are using the 8-week covered period. And of course, those, because of the time frame to elect to use that, those have all already exhausted. It's a little bit different conversation if a borrower is using the 24-week covered period, because now we've got the ability to apply for loan forgiveness at any point in time up until loan maturity. That's contingent, though, on a few factors. One, certainly the banks have to be in a position to accept loan forgiveness applications, and that's, largely dependent here on further clarification from the SBA on exactly what that looks like, what do they need to comply with, and frankly, whether or not a loan forgiveness application will be needed, I guess, is, as we hear the talks through Congress. But in those cases, it's a bit challenging because that covered period, if it's 24 weeks and the information as the SBA application stands today, is looking for information all the way through the date in which you actually apply for loan forgiveness. And so we can continue to gather documentation along the way, prepare ourselves and understand what's coming, but we don't know at what point do we stop gathering that information. And so it is a little bit challenging working through those situations currently until the loan forgiveness portals and things of that nature really begin to start opening up.
Right. And I think that's exactly the challenge, is that things are very, very fluid, but at the same time, the clock is ticking.
I would add, from a lender's perspective, I just heard lots of documents, lots of variability, lots of archive material, having an application portal. If you're not preparing now for this, even with the rules being fluid, who in your organization is the expert in keeping up with this? And then as you bring other team members in to process these loans, how are they making sure that information is communicating down? And are you consistent with your process? You see, so automation here now more, we went through the first wave, and the first wave was figure it out as you go. And it's the same thing. Well, that second wave is going to be, if it, probably even quicker and bigger, and all of these rules that continue to change, you're going to want some sort of workflow system that contemplates understanding those things, positioning the rules dynamically in a way that most of your other application systems, if you're a consumer lender, have a lot of this built in. This isn't out there right now, but there's so many pitfalls related to what could go wrong, especially if you've never worked with the SBA before. Little things like once you receive an application, you have 60 days to submit this for decision. If you don't know that, the NCOA and the FDIC are saying, hey, we're going to be relaxed on how we, allow for loan loss. Well, but if the SBA doesn't forgive the loan because you didn't process the paperwork, you're still going to be on the hook for it, right? Having an automated process and system in place that allows your team to focus on serving your borrowers is really going to be critical. working that workflow through with the Aprios and Ken's group to say, did we get this right, is going to be important too. And then at the end of this, you need these documents for 7 years. Where are you keeping them? If you've got them in a paper file or in a folder, you're putting yourself at continued risk. So no, not all the answers are there, but at least what we saw when Jeff was explaining to us, they have at least here, this is what you told me, this is what you need to ask for, let's get that going. And then if one organization, Jeff's organization, is keeping up with those rules, your team is doing that more smartly as you go. Controls at the end, let the experts, let the law firms say, hey, we're keeping up with this, and let them go ahead and button that up. You give them a good package, they're going to get that through more quickly. You're going to have better controls. If and when the auditors come in, you're going to be better prepared.
Yeah, Scott, I like what you said there. And Ken, you touched on it too. The guidance is changing, and we don't know when it will stop changing. You know, it's almost disappointing that it's been since, I think it's June 25th was the last day we received guidance, but who's tracking that?
Like every day, nothing.
But in all reality, I mean, we need to be prepared in all respects for what is here in front of us and the resources that have been provided to us today. And knowing that this is and has been a very fluid program, and be ready to turn when appropriate. But if we wait until all the clarification and all of the guidance is out to start the process, then that's going to be a big challenge, not only for the processes, the automation, but then rolling that out to your customers and them getting prepared for what's going to be needed, and them gathering the documents, because it's representing many PPP loan borrowers. They're making decisions as they go. These funds are being exhausted, and they may need to make a change. And so they want to know when they can settle this obligation, just the same as you'd like to be able to know that it's off of your books. And so being prepared as much as possible, based on the guidance we have here today, is an absolute must.
And I'd like to add a little bit more to that, because we mentioned, I mean, the types of businesses you're serving now are probably, if you've been a commercial lender for a while, you haven't been serving these more mom and pop shops. A majority of these loans are under $100,000. As you just highlighted, these people are they're not running a business with complicated paperwork and knowing what they're doing. So if you don't have an organized system to collect that, it's going to make their experience more difficult, and you might be putting them at risk if they don't have the right paperwork in place, and maybe possibly putting them at risk for forgiveness. So these are all new business. Like, many of these are businesses that many of us haven't served. Many of these lenders haven't, they've dealt with larger clients that have more sophistication. Having some standard process and automation in place really is going to help the borrower, as well as the lender, as well as the SBA and your balance sheet at the end of the day.
You both mentioned something really interesting, and that's the concept of partial forgiveness, or some of these loans aren't going to be forgiven either in part or in whole. Ken, what would you say to banks that are taking a look at this thinking, okay, I've got to get through forgiveness, but they're not quite paying attention to the far side of the fence? What happens if some of these loans or some portion of these loans don't get forgiven?
Yeah, that's a great question, Jeff. So there's a couple things to keep in mind here. One, this loan forgiveness process seems to be off to a slow start. But there's also ongoing obligations, even though it's off to a slow start, meaning the PPP is a 7A SBA loan program. It was layered in and on top of a very long and complicated regulatory scheme known as the SBA 7A loan program. Now, some criticize that decision because of the complexities that have come from that. If you were to take a look at the FAQs that have been published, overwhelming number of those speak to the intricacies of the underlying regulatory scheme. But that said, it allowed Congress to act quickly. Congress didn't have a lot of time to come up with a list of what businesses are eligible, what could be a problem. I mean, it would take him years to hammer out those details. So I think there was some wisdom in the way they handled this. A great counterexample is the Main Street Lending Program, where it's a program that's been created whole cloth. I think the latest I read yesterday, they have funded one loan under the Main Street Lending Program. And if you take a look at the guidance under that program, there's a lot of ambiguities, a lot of unanswered questions. It doesn't have the benefit of decades of SBA regulatory tweaking and hearing and appeals that have really created, I would say, more or less a solid foundation for purposes of the PPP. That said, as a lender, there's a solid foundation of rules and regulations that you must adhere to. Even now, as we're waiting to see exactly how the loan forgiveness process rolls out, we're starting to see with our clients ongoing issues with respect to how these lenders are supposed to manage these credits. A great example is a change of control notion. If a business comes to you today, and it really right now, it doesn't really matter whether they have submitted the loan application for forgiveness or they're waiting to roll through the full 24-week period. But let's say they have been approached by another business that is willing to purchase the company, whether it be a merger, full-blown purchase of all the equity, or maybe just an asset transaction where substantially all the assets are purchased. What are you supposed to do? If you take a look at the form SBA PPP note, there's actually language in there. It says that a company can't merge or consolidate, change ownership, or otherwise change business structure without the lender consent. So borrowers that are paying attention are likely going to turn around and ask their PPP lender to give their blessing to that kind of transaction. But then that also raises other questions. What happens if upon consummating of that transaction, the company essentially would have been an ineligible PPP borrower, such as the affiliate rule kicks in, and now the company is far too large, are those issues. So there are some ambiguities there. Thankfully, because of the underlying regulatory scheme, these types of questions have been answered. But what's important is in those cases, lenders are then also required to turn around and get the approval of the SBA. And the SBA has made it very clear to our lender clients over the last several weeks that they are expecting those standard policies to be adhered to. If you go onto the SBA's website, they have a servicing and liquidation guide, which is probably most pertinent. There's another guide you probably heard of, that's the standard operating procedures. And that's for loan programs generally. And a lot of the guidance there speaks to the inception of the loan. But the servicing and liquidation guide that's published by the SBA is incredibly relevant because it speaks to this very issue. If a borrower comes to you with an SBA loan, which the PPP loan is, you must obtain the SBA's approval for that transaction. What are the consequences? What's interesting here, we've been very focused, I think, throughout the PPP on avoiding an issue with respect to loan forgiveness. It's been very borrower-centric, and for obvious reasons, because the program was designed for borrowers. But in cases of servicing a credit under the SBA loan program, the consequences for lenders not performing their responsibilities as they're required to can result in the guarantee of the underlying loan being stripped away by the SBA. Now, that's a very significant consequence. Here we're dealing with not only how do we make sure that we adhere to the guidelines so a borrower's loan can be fully forgiven, but you also need to be mindful that there are steps you need to continue to take, whether today or whether the loan remains in part after partial forgiveness through the life of the loan, to make sure you're doing everything you need to do as essentially an SBA 7A lender.
Yeah, and I think that's really an interesting point that a lot of people haven't considered is, the community bank world jumped in, and it's a double-edged sword, as you said. PPP went very fast. It went very fast. Cash got in the hands of small businesses very, very quickly, and that was admirable for the situation that was going on. But as a result, they based it off of a lot of rules and regulations that the people who are making those loans to help their community, help the small business in their community, might not have realized they were signing up for. Thanks, Ken.
And I would add to that, it also doesn't alleviate the lender of obligation too. And so the things that you may have made a few omissions in the application process, well, if you're compounding that on the forgiveness process, and that risk of actually not having that loan forgiven, well, that becomes a balance sheet issue, especially as many of these businesses may not be solvent because they're smaller businesses. And if you did volume, which some of the volume is very impressive, and you don't have a systemic process in place with archivability and recallability to make sure that you have your documentation in place, the SBA can come back for, I believe it's up to 7 years to go ahead and audit their paperwork, right? And they're going to audit any loan over $2 million, but they still reserve the right to audit any loan under $2 million. Whether they do or they don't, who knows? But if you're not prepared, or if you did this and you don't have a process that is easy to explain to them, well, this auditor is going to be a bit skeptical. This auditor is going to say, well, what else did we possibly miss? So the cleaner and tighter you are, and there is no, like, ignorance is not going to be an excuse here. You do have to know the rules. So leveraging a system that allows you to do that more intelligently is going to help mitigate that risk.
Yeah, a couple of interesting things that both Ken and Scott, you guys each mentioned there. Change of control, Ken, I think is a great example, because these PPP funds, again, and we're looking at, the average loan size is $105,000. So there's a lot of loans out there for some very small businesses as we look at payroll costs or business activity, things of that nature. If they can't weather this storm, they may very well be targeted for acquisition, thereby raising this whole change of control issue. So it may not seem like it's significant, as Ken's explaining, but that's a really big deal. And that's an even bigger deal the longer that it goes on and the forgiveness is settled and we go through that process. So that's something, that's definitely important. And then Scott, your comment there, as we look at the continuing process, the application itself, the documentation, keeping that, tight, right? As a lender, that's only going to be so good as the documentation that's been provided by your customers. Mm-hmm. And so this really is about getting everything done. And that's, the one thing that I can't stress enough is equip your borrowers with all of the information, all of the tools, because as we all know, garbage in, garbage out. Mm-hmm. And so if we can shift the responsibility to where it really belongs, push that to the borrowers. They're the ones who have the documentation. They know the spending. They've got the invoices, the check copies, anything you can think of. And certainly, obviously, when we're talking about some of these eligibility considerations, the burden's on them. They made those certifications as the borrower.
True, but I really want to add there, which is really critical, but imagine now, put yourself in the lender side and your employees and key man risk. If you have 15, 20 people doing this, if they're not all asking for the same thing, you're getting 15, 20 people asking for 15, 20 things, which is going to, exacerbate that situation of getting the borrower the right information consistently from every employee in that process. And so, like you said, if you don't have an automated system with some intuitive workflow, with some dynamic language in it, you may steer that borrower wrong. Yes, the borrower's on the hook, but ultimately, most of these are community lenders. The relationship's important for many of these. You want to continue business here. You make this seamless and you make this easy for them and you help them to get forgiveness, they'll be back. And that's some of the things that you want to consider too. So I think it's imperative. If we ask for garbage, we're going to get garbage. If we ask for the right things, we're going to get the right things and manage through it. So I think that's a really tremendous point.
Yeah, and there was something you brought up yesterday, Scott, when we were talking. You had mentioned that everybody's very hyper-focused on SBA audit. If an SBA auditor shows up or the SBA comes in. But there's another audit that's going to go on, and all the bankers on the phone, I'm sure, are very familiar with it. But if you could talk a little bit about the standard loan audits and loan risk reserve.
I mean, both the FDIC and the NCUA are trying to accommodate the PPP loan for sure. But as a regulator, both of those regulators are going to come in with a level of skepticism and say, many of you were not SBA lenders. Many of you were partial commercial lenders. We want to make sure you had the key controls in place, whether it's your external auditor or whether it is your regulator. They are going to look at your process to make sure you understood the risk. They're also going to look at the process and your balance sheet to say, did you understand where you had loan forgiveness versus where you didn't? They also, for those loans that remain, what is your servicing process? What is your archive process? We need to make sure that you're managing the risk on your balance sheet, because and sometimes we hear, well, the NCUA or the FDIC said we're going to be lax on forgiveness because this is a guaranteed loan. It's only guaranteed if you do the paperwork. And if you systemically have bad paperwork, you're putting your organization at risk. So you have to make sure that you can explain to the auditors your process, your archiving, your workflow, your controls, so that they know you understand the risk and that you are managing a new process with some relative intelligence and basically making sure you're mitigating those risks across the organization. So I think everybody has to be ready, when audit time comes, whether it's your external auditor or it's your, in your internal auditor, you want to make sure that you have those processes well done.
And certainly as an auditor by trade, I can't echo that enough. Scott, you are dead on. Processes, systems, controls, and not only the design of those, but that they're implemented and are functioning effectively. It's going to save you a ton of headache. Again, a little bit of prep time on the front end saves you a lot on the back end.
Yeah, and speaking of that back end of the process, Ken, one of the things you helped me with early on as well is the diligence and review, and what that could and should look like for a bank. Can you help explain to the folks on today what that back end process should look like, what they should plan for making sure the forgiveness application is in good order before it's submitted to the SBA?
Sure. So when it comes to the program, it is very borrower focused, and there's a great deal of reliance on borrower certifications. That said, that doesn't mean the lenders don't have to take a closer look and perform their responsibilities as a lender when checking the documentation to make sure that it's complete. The FAQs and the guidance make it clear that lenders will be looking for clear error. If there's clear error, you are required to go back to the borrower and ask for more information. But one thing that doesn't get mentioned, but it almost is obvious, but I think it's important, even if you have knowledge, if you have bank officers that are working on these loan applications and they're maybe familiar with the borrower and they have knowledge that to them could cause an issue with respect to either eligibility or even loan forgiveness, that knowledge could be imputed onto the lender, into the bank, in the credit union. And that's important because you also need to make sure that you educate all of those that are working on these files that if you know something, even above and beyond clear error, we need to be informed of it so we can make an educated decision on whether this should be processed. Now, when it comes to the documentation as for what is appropriate for purposes of supporting the details and information in connection with a loan forgiveness application, ideally it shouldn't be terribly different than the documentation that was provided in connection with the loan application itself, but it's got to be complete. And to the extent it's not complete, the lender is going to be obligated to work directly with the borrower to make sure the file is complete. What's really interesting to me is the lender is responsible under the program to approve a loan forgiveness application, and then they turn around and they send it to the SBA, and then the SBA is then responsible of letting the lender know whether that is in fact approved on their end. What are the consequences for lenders falling short of their responsibility? That remains unclear, but make no mistake, there will be consequences for lenders and financial institutions that, for example, spot clear error, but decide to just pass the buck, approve the loan application, and send it on to the SBA. The consequences can run the gamut from just simple denial of loan forgiveness, again, all the way to a denial of the guarantee of the loan itself, and a requirement that the lender hold that credit through the life of the loan. So don't take those responsibilities lightly. There needs to be procedures and policies in place to make sure that all of your staff that are working on these files are educated and can appreciate the risks for incomplete files.
And supplemented by a system that has intuitive logic in it. And I want to add, to your point, Ken, not only are they submitting, you have a 60-day timeline. I think we all went through the first phase, and the timing of trying to get these loans done, you're not only submitting for approval, you're also submitting simultaneously for reimbursement. So both of those processes have to be mapped out so that you can assure a better pull-through rate on your getting reimbursed. So it's not even just what Jeff's team put together really has a lot of that consistency built in so that your teams can have consistent knowledge, and then they can serve those members on all these exceptions, or they can leverage, like you said, Ken's area or even, Justin's area to make sure that they have all their documentation in place. But give them a chance to be consistent and allow them to move as many loans through the process in those timelines and mitigate some of that variability.
Yeah, well, one thing that I think will be extremely interesting in having all the conversations on the borrower side that is very different than what we saw in applying to obtain the loan are these safe harbors. And in particular, I think the safe harbor surrounding, what I like to refer to as the level of business activity, right? Which kind of allows a borrower to be exempt from an FTE reduction if they could substantiate or at least certify, document, and not even submit. They must maintain this document, but they're making a certification that their level of business activity has been reduced from February 15th onward as a result of implementation of recommendations and guidance from Department of Health and Human Services and the CDC. You better believe that that's going to be leveraged significantly by a lot of borrowers, and getting comfortable as the lender of understanding where that is, what maybe you decide you do want to look at it. Maybe it's not put forth by the SBA as a required submittal, but you're going to take an additional risk mitigation factor. Maybe you do want to obtain that information because it is very, very, very ambiguous. I've had a lot of conversations and we try, of course, we're trying to steer our clients in the right direction. But I think I can't tell you how many of these borrowers that are looking and saying, of course I've been impacted by COVID-19, right? That's why I have this loan to begin with. And so it is an item to pay attention to that is going to be a lot different on the back end than it was on the front end in originating a loan.
Yeah, and that's the process that we took on it is we were taking kind of a scientific method. We wanted to eliminate as many variables as possible. Whether it be, I talked to some branch presidents who quickly went back to their roots and became commercial lenders through this process, which is great that they were pitching in, but at the same time, it does leave you a little bit of pause if you're, chief credit officer of a bank saying, did he do everything right? Did everything get done properly? And being able to verify that information. This has been a spectacular conversation, guys. I really appreciate your time today. And I think as the conversation has flowed, it's really showed, the different stages of information and expertise that you each bring. And I really appreciate all the help you've given us in informing the product. I kind of want to provide a parting shots before we break here. But, Justin, if you're sitting in front of a bank and they're trying to figure out what are we going to do for all of our borrowers who are asking when I can get forgiveness, how do I get forgiveness? What would you tell them that is the most important thing about Aprio in getting through and surviving that process?
Sure, that's a loaded question there, Jeff. I'll do my best to field it. Certainly with the help and support of both Scott and Ken, because the comments that they've made are vital to these recommendations, right? From a borrower standpoint, we're being asked all the time, do you know if this bank is ready to accept applications? Or do you know if this bank is ready to accept applications? Just depending on who they're speaking to. And I can't tell you how many times this conversation comes back to, I've spent my PPP funds, I've complied with the program, they're all done. I don't have the revenue coming in anymore to continue to maintain my workforce. And now what do I do? And the borrower is now sitting here saying, it's my lender's fault. They're not accepting the loan forgiveness application yet. If I could submit it now, I would next week be able to in turn make a workforce reduction without it jeopardizing my loan forgiveness. I don't say that intentionally to scare our audience by any means, but that relationship, as we spoke to here, the whole reason we got into this program was to support our existing clients or maybe develop new relationships with new clients. And this is a great way to sit there and be mutually invested with them and provide an opportunity to support their business. And so working through, again, developing your processes, being your preparedness, your communication with the borrower so that they are equally as prepared, because you better believe it, they're ready to get this thing forgiven. They are ready. If those funds are spent, they are chomping at the bit to go ahead and submit a loan forgiveness application. And so it's getting the systems, the controls, the processes, and then most importantly, communicating all of that to your borrowers so that they in turn can do their part to make this process as simplistic as it possibly can be.
Yep. Thanks so much, Justin. I appreciate your time today. So Scott, you've been in and out of community banks and credit unions your whole career. If you were to walk into a credit union today and they had done, PPP loans and were staring down the barrel of doing forgiveness for even 100 loans, what would be your approach to helping them prepare?
First and foremost, help them start with, how did the first phase go? Where were your documents and where were your controls in place? And I think, to Justin's point, are you ready to take these applications? And if you're ready to take them, how are you communicating that with your borrower? Does the borrower have access to this information quickly? And the empathy that Justin just brought up, many of these they're very stressed out organizations. The sooner you get there, the better you're going to get there. Where are your resources? Do you have an ability to implement a system right now? You probably don't, because you're dealing with, if you're doing consumer lending, you're dealing with exploding pipelines there. You're dealing with remote resources. So how do you help mitigate that variability of performance based on the fact that most of your people, depending on where you are in the country, aren't in the office? So how do you get a systemic process in place as quickly as possible in order to then streamline the operation, communicate with your borrower quickly, and get as many applications in and meet the timeline so that you can then manage the backside of this? The more loans you get forgiven, the more loans you get off your balance sheet, the better your risk profile is for what's remaining. And so what we see with community banks and credit unions across the country is resource. We don't have the resources. We have to go to IT. We have to try to figure out a way to get it implemented. It's in back of another project. How do we get this in here? You don't have time here. You don't have time to put this on a project plan. This has to happen. And we saw how quickly the first phase came in. The second phase is going to come in even more quickly, especially what Justin's highlighting. Being prepared now is critical. And by the way, we're looking probably about a 90 to 120 day cycle here. So this is coming fast and furious, and it's going to be, gone fast and furious for the majority. But if you do it right, it's going to be far less painful for your end of the year processing. So how to get that implemented, how to make sure it works successfully, and how you sustain it is really where we would approach it.
Yeah, the thing I'd add, Scott, and I think that's fantastic. One of the ways that we are collaborating here to make this opportunity feasible is providing not only guidance to the borrowers on what the program is, what's an eligible cost, what's not, what causes a reduction, what doesn't, but understanding how the calculation works as it relates to loan forgiveness, having snippet video clips that say, hey, when you get to that application, you can't get there yet, but when you do, here's what goes here. Here's where I find that information within my documents, et cetera, so that when they do get ready to apply for loan forgiveness, they know what's coming, and it's just simply data inputs at that point because they've already been locked and loaded, waiting for you to start accepting.
And I'll feed right into Ken. And really the most important part is the workflow. So you've got the ability to have intuitive intake with dynamic language and logic, with tutorial videos that help them understand what they need to do, built-in workflow with a law firm standing by to make sure that you dotted your I's and crossed your T's before you submit that to the SBA. That's, if you're doing that in one system and you're emailing out of another system and you're getting emails from a borrower and none of that's in a centralized location, you're just opening yourself up to exposure. Mitigate risk, educate the borrowers, provide a streamlined process. You're going to get through this more easily. Great.
Thanks, Scott. Hey, Ken, so that leaves Dorsey at the back end of the process. So you guys, Aprio is going to get everybody educated. Scott's group is going to make sure they know what they're doing from a process and control standpoint. And so when the first PPP forgiveness applications get to you and your team at Dorsey, what do you foresee? Is there anything you're preparing for or you expect to be helping the bankers through?
Yeah, that's a great question. We do already help very large national banks, and we're their go-to on these complicated questions. So we're in the midst of this already. We have about a dozen attorneys on our PPP SBA task force team, several partners. We have partners that are nationally recognized for their regulatory expertise. We have partners that are former prosecutors for the federal government. They prosecuted SBA program related matters. So we got extensive knowledge and depth on the team, which is very helpful because a lot of the things that we're seeing from the legal side of the picture are the ambiguous questions that, that the issues that are coming up that can't really be answered. And it's almost a heuristic where you have to pull together all these legal specialists to say, let's take a step back and consider the spirit of the program. Then what is a good faith approach to handle this particular issue? And it's actually pretty critical in a lot of these cases, because especially with our larger lender clients, they're in the midst of processing tens of thousands of applications. You need to come up with more of a holistic, kind of a one-size-fits-all rule for a particular ambiguity that aren't addressed in the rules and that are certainly not addressed in the promulgated rules or FAQs. So when it comes to how we see our role, sure, reviewing applications and making sure the documentation is complete is helpful, but frankly, Epic River has a very solid platform to do a lot of that work. It's doing a lot of the work with respect to the inputs and outputs, et cetera. I think the real value add for the legal side is the complexities that arise above and beyond that. Because even within the applications themselves, we're starting to see some ambiguities. And you're just going to have to be prepared to live with general guidance based on a good faith knowledge of the law, and also an understanding and appreciation for the spirit of the program, and then therefore implementing rules that complement both of those.
Something I just want to add, because I want to come back to a stat I said in the beginning, with 86+% of these organizations that gave a significant amount of these loans, even though the larger banks, those organizations, the larger organizations, they have these resources, they have that expertise, they have SBA lenders. Many of these smaller organizations don't have that expertise at a level that is consistent, that has all of that. So if you don't have a systemic process with systemic education for your borrowers, with controls put in place to check that before you do it in the SBA, you're just opening yourself up. Leverage the resources of the system, leverage the resources of the network. You're going to then have a better experience for your borrowers in the long run. So like I said, most of the organizations that really will benefit from this don't have that type of expertise on staff and don't have that level of consistency on staff. That's why you outsource things. This is an example when you do that.
Yeah. Well, this has been great. Thanks again, guys. I really appreciate it. Scott and Justin, unfortunately, Ken won with his use of promulgate. So that's the biggest word in the panel. So work on it for next time. Ken, great work working that in and using it appropriately. Lindsay, I'll turn it back over to you.
You're on mute, Lindsay. There you go.
You guys so much for your time today. This has been a great discussion, and thanks to all of you attendees for sticking with us. I'm going to send an email with a link to this video as soon as it's available if you'd like to watch it again or share it with someone else. And I will also follow up with contact information for each of our panelists so you guys can continue the conversation with them if you are interested in that. Thanks again for your time today. This has been awesome, and have a great rest of your day.
We appreciate it. Thanks, everyone.
Thanks.
Good luck.
Thank you.
Thanks, guys.
Thank you, everybody.